Welcome to the Silent Trading channel. Today I'll be analyzing the gold chart on Tuesday the 13th of January, and I'll start by analyzing the H4 or the 4-hour time frame. And before you watch this video, please subscribe, like, comment and share for me if you like this video, because that will be a lot of help in supporting me into creating content, into creating quality videos for you guys to watch, for you guys to learn, right? So now I'll start by analyzing on the 4-hour time frame first, right? At the 4-hour time frame or the 4-hour candle, we see that the 4-hour candle is right now in a sideways down phase, because in other theories or in other strategies, we only know that the price is climbing up, the price is dumping down, right? But in my theory or in my version of trading, we need to be able to see the narrative behind each price action, the narrative behind each candle movement, whether it is going up, whether it's going down, because the way it's climbing up, the way it's dropping down, has a significant effect on the way the price is moving, on the way price action is showing, because price normally has a way of moving, because when price move at a significant phase, there will be phases that the price are moving to accumulate buy volumes. There are phases to price accumulating sell volumes. There are also phases that the price are dropping down to clear off volumes from the market, right? By triggering stop losses, by triggering or by pressuring traders or retail traders to close their position in their loss, in the drawdown, right? Because the problem is price always move up and down, or either in a sideways phase, right? But we need to be able to know that price is moving up because of what? Price is moving down because of what? Because there are always cause and effect behind each and every movement of the candle, right? So in my way of looking at candle, I need to be able to know whether each candle movement up or each candle movement down, it is in the breakout below or breakout above, or it is climbing up, or slowly dropping down, because the movement is the cause and is a cause and effect of all price action on the price, of all the breakout, of all the break above, break below. Because this is one thing you guys may not know right now, but I'm guiding you guys on the way I trade, on the way I'm looking at price action, on the way I'm looking at all narrative behind each price. Because if you know this, you are gonna be able to trade more I would say more fluently, right? You will be able to go along with the flow, right? Because by knowing what the price action is showing us, by knowing the narrative, by knowing what is behind the scene, you will be able to catch a moment of truth in a price. Because price always has a way of showing us, the market always has a way of showing us what the market is doing. Because price action needs to be created, right? But price action created doesn't mean price action always has to be respect, correct? Resistance or support doesn't always has to be respect, right? Even though key level, even key support and resistance doesn't always has to be respect, because we need to know the way price move to support, move to resistance. We need to know the way price move down, move up. If the price has a sharp movement up, has a sharp movement down, or the way price is moving down is a slow descending down, or slow climbing up, that is what the price is revealing to us. But we wouldn't be able to know until we have learned this strategy of mine, which I've got from my mentor, and I'm showing you guys today. I'm educating you guys in my video today, because everything has a reason. Every price movement has a reason, which is a cause and effect of all price movement. Now we'll start by looking at the 4-hour time frame right now. The 4-hour candle right now, we see it is slowly descending down, right? It is slowly dropping down, correct? There isn't a sharp move downward, right? And the price action right now is in the what? The bullish, not bullish. The price action right now is bearish because a reversal has been created, and the reversal has been complete because price was able to close below support, and price is slowly climbing down. So by knowing that the price is slowly descending down instead of a sharp break below, we know that price is slowly accumulating buy volumes. Because why? Because when price drop down and touch support, support is where buy limits are triggered. Support is where buy volumes or buy position is executed by traders, because traders, retail traders, only know how to buy a support and sell a resistance, or either they buy when price touches resistance because they use breakout to buy, they use breakout to sell, right? So volumes from position, volume from orders will only occur as support and resistance, which means price touching support and then start slowly descending down indicates that price is slowly climbing down to accumulate sell buy volumes from all support, which means once buy volumes or orders are accumulated enough, price will start breaking down or breaking below. And after a price break below is where I will start buying. So this is where I'll start buying in this zone over here, which you guys call fair value gap. But I don't call this fair value gap. I just call this an unmitigated or an unclear candle, which means right now when the price is sideways down, right? It's in a sideways down phase. I believe that this support I use to accumulate buy volume, which means the market is right now accumulating buy position from retail traders, and when retail traders are buying enough for the market to dump, the market will then dump. So right now I'm waiting, or I'm anticipating for the market to dump instead of break above, because in a sideways down phase, buyers are accumulated in the market. So when the market are accumulating buyers, the market wouldn't be able to let those buyers profit, right? So when most of the time buyers are in the market, retail traders are buying, the market wouldn't give them a chance to be profitable, because the market would then have to dump down on them, and by dumping down, the market is gonna clear off all of their volumes, either by triggering stop loss or either by pressuring these traders to close their position. So when market drops down to pressure buyers above, it is where I'm gonna start buying, which means right now I'll either buy at this week over here, or I'll either buy at what? Or I'll either buy at the previous all-time high over here. Right? This previous all-time high is where I'll enter a position, which means my buy limits will be at this all-time high, previous all-time high over here, right? So when price break below, at the least, when price break below, the thing the price would have to do is, at the least, if it's gonna break, it will be a sharp break below, right? And when it break below, if it is looking to drop further and further, the next thing price will have to do is at least push above to clear off sell volume, because by breaking below and clearing off buy volume from above, there will be people following sell or panic sell, right? Panic sell over here. When people panic sell, the price will then push up and trigger stop loss from those panic sell over here, right? When those panic sell get their stop loss swept, right? Get their order swept by triggering stop loss over here, the price will then go below. So when price go below, when price is gonna go below, it is where I will get my buy orders from here, and I'll TP at about here, right? You either place a TP or a take profit at a previous week over here, because price is always gonna bounce at week. Price is gonna bounce back or rebound at week. normally, and then when price push up and bounce at above wick and the price will drop down below further, it is where I'm gonna place my take profit. So if I got my order from here at about 4539 and the price move up to clear off volumes at about 4565, about, I'll say about 2000 pips, I will be content with this 2000 pips and I'll close my position. Because if price is looking to move below, the price will have to clear off volumes up here, right? Which is what we call a what? A lower high and lower low, correct? So if price is gonna create a lower high and lower low, I will buy at the lower low over here, and when the price is creating a lower low above here, it is where I will take my profit. Alright? So there are always opportunities for you to buy and sell in the chart, in the market, but the problem is you guys normally don't know how to trade real price action. You guys don't understand the narrative behind each price action and each candle movement. That is why you always get your stop loss sweep before price go further, because you need to be able to understand each narrative behind the price. So if price is gonna break below, price will start climbing down or descending down slowly, because by descending down slowly, they allow buyers which bought over here, which bought over here, and bought over here. Those buyers that bought at support over here is gonna hold on to their position. Why? Wishing price is gonna reverse soon, but by holding on to their position, price is not gonna reverse. Price is only gonna dump below, and when dumping below, pressuring them to close their position is where the price is gonna reverse. So price either reverse from here, or price just push up and clear and then push further, right? So when I buy over here, I buy going against the trend because price haven't reversed, right? I buy going against the trend and I take profit when the price is creating lower low, correct? Lower high and lower low. So when this lower low is created, I buy, and when the price push up to create a lower high, but the price wouldn't be able to push up to touch this resistance over here, because touching resistance means triggering sell limits. So when price push up to create a lower high, it is where I'll take my profit. So right now, if you're gonna buy, you wait to buy below all this wick. At least buy limits at here or at the previous all-time highs wick, right? Because if price is looking to reverse, price will reverse after touching or clearing off all-time high wick, previous all-time high wick over here, or we call it a mitigated, right? Mitigated zone. So when price is gonna reverse, it is gonna reverse from here. If it's not gonna reverse, it is gonna push up, right? Creating a lower high and then push down further. So my buy position over here that I'm buying, I'm gonna take profit at here and wait for this reversal to be complete, because if reversal is gonna complete, right, push down over here and then start pushing up, right? So if reversal is complete over here, when the price push down but not touching this support, not triggering buy limit, this is where I'm gonna buy more. I'm gonna snowball on my position and wait for the price to push up, correct? So if price is not going to reverse up here, from here the price is going down further. But if the price is reversing from here, the price will drop down to start creating a higher low and higher high. This is where I'm going to buy, right? So today, please be cautious in placing your position, placing your orders, because you need to know whether the price is going to reverse. If the price is not going to reverse yet, don't rush to enter a position, because it will be too risky for your portfolio to hold on, correct? Because if the price is going to go down and you're buying and you're going against the trend and buying, you're going to be losing your portfolio. So be cautious, manage your risk, manage your capital well. Never let emotions control your portfolio instead of reasoning. Okay? So for today, that's all I'm going to say, because wish you guys happy trading, safe trading, and wish you guys trade and be profitable along the way and be consistent in profit, right? So that's all I'm gonna say. See ya.